Hello traders, Jeff with OptionBoxer.com. I want to introduce you to a new strategy today, and I'm going to try to be very quick with this video. I know I've been long-winded in videos past, and I'm trying to get better with that. So before I do, please know that I am not a registered financial advisor, and this video is not in any way a recommendation for you to buy or sell any security. Please know that before you trade, that trading is very risky, and I certainly would not suggest you trade until you understand the market dynamics and the things at play, especially with options, given that there are so many variables to consider. So that being cleared up there, let's go ahead and take a look at what I've got. Basically what I've done is we noticed the price here in Apple. I've got Apple pulled up in on demand, and we noticed the price is at 164. So I've taken the bid price of on the put side, the 165, 160, which is that number falls in between there, and then of course that number falls in between here on the call side. So I've taken these two bid prices and these two bid prices and added them together, and the numbers are kind of bouncing around, so they may not match up perfectly over here, and that's okay, but it still tells us the same story. And basically I'm using this number just to identify what the options market thinks is going to happen. And you can see I've got the September 21st 2018 contract month open, and I just kind of picked that randomly because I'm going to buy some shares of Apple, and I'll probably hold it for a year, half a year maybe, and I just want to see a little bit longer term. Of course, you could do the same thing way out here to kind of gauge what the options market is thinking all the way into June of 2020. But for me, I probably won't hold it quite that long. At least that's not my plan at the moment. And so I'm just using the 150 for this video, and you can manipulate the information as you see fit. But regardless, what this is telling me is that the put on the if I was to sell, I guess I got to give you a little bit of a lesson on my thought process. I should also say I don't know if I'm correct in my thought process. I'm sure there's someone out there much smarter than me that could refute the information that I'm about to share with you. Regardless, this is how I use it. Right or wrong, that's just what I do. And so basically I've interpreted this to mean that if I was to sell a put, let's say the 160 put here, it's 865, so this number doesn't match up, of course, but the market, the average price, I guess, between these two would be lower than if I was to sell the average price between these two. And the reason I find value in that piece of knowledge is basically the market's telling me right now that they're expecting they're expecting the market to go higher. And so if I was to sell this, I'm going to take less premium. So you can see, just looking at it, 870 versus 1015. Now it would actually be this 785. Well, it would actually be the average between those two. Regardless, it's the market's going to pay me less to take a bullish position. It's going to pay me more to take a bearish position. And the reason that is because the market right now is anticipating a move higher off of this support level. You can see we've got support way back here, a little bit of support there as well. And so the market is expecting a rebound from this level. And so I'm not really sure if it will rebound from this level, but we're just using the information that we have. So I had to give you a little bit of a lesson there. Hopefully that made sense. I know I can get a little bit tongue-tied. No, don't save. Yeah, I don't want to say that. So hopefully that information was at least mildly valuable. I'm going to use it to make a decision here to buy 10 shares of Apple. And this video, of course, I trade options, so this video isn't geared towards buying or selling shares of stock. Okay, and it did fill. But I just want to go ahead and have Apple there so that I can take advantage if it does move higher. And basically this video is going to be it's kind of a combination of buying the shares of stock and selling iron condors, and in particularly is selling iron condors in maybe a way that you haven't thought about before, and trying to build them, I guess, for lack of a better word, trying to build and adjust them to the ideal iron condor that will yield you a nice profit. And so we've got our position open in Apple. Now we're going to look to open an iron condor, and let's see, let's sell a vertical here. Probably want to do 5 points wide, so want to probably make that 155 just so we can get a nice credit out of this deal. And same thing down here, probably want to go one strike out of the money. If this were a live environment, I could use my probability out of the money. Of course, since it's a simulated environment, it doesn't give me that information, but you can kind of make a judgment. If I had delta pulled up, delta would be a nice way to kind of see what the odds are. I'm just going to try to match up, as close as I can. So right here, match up the premiums as close as I can. So let's sell the vertical there. You can see on the 5-point wide, let's see, 172. All right, so on a 5-point wide spread, we're collecting $3.32. That's pretty good. I mean, the pot odds are over 50-50, and that's always a positive iron condor for me. But you'll notice that the strike price width isn't very wide, and so we really, we have a tight range of 750 for a call, or for a security like Apple. 750 is just not going to be wide enough, and the odds are this iron condor will be busted, and it'll breach one side or another. But that's kind of the beauty of what I want to build here. So I always kind of knock down the price here in the on-demand environment, just so it gets filled quickly and I don't have to sit there and wait for it to simulate that it's sending it to the market and all that good jazz. So basically I'm going to monitor this position on a week-to-week basis. So I'm going to go ahead and skip ahead a week. And you can see right now the mark, or the current stock price, is 164, and we'll see what it did. Remember, we want it to stay between 160 and 167. Takes a minute just to load up here. For some reason, it's always quicker on my laptop than it is on my desktop, but regardless, you can see it is still right. I mean, pretty much smack dab in the middle there, and we are showing a small profit, and then we did have a little bit of a move higher from when we bought it. So that's an all-around win for the first week. So there's nothing really to do. So we'll just keep an eye on our position. The reason I'm looking at it on a week-to-week basis is that way you don't get, I don't know, and for lack of a better term, analysis paralysis, all that stuff you've heard 100 times. It just doesn't, you just don't overlook at it, because once the position is live, it's easy to overtrade, or to look at things the wrong way. And so you can see over the course of this past week, something big happened, and if we had been looking at it, we may have been able to see this giant move and could have maybe been a little more nimble and gotten out of our position. But you can see we were hedged against a huge move to the upside. And so yeah, we didn't get to take all of this profit because we lost some here. But now I'm going to show you how we can go about trying to get this back. So we've lost a fair amount of money here. Our trade price was 198. Let's see. So we lost a fair amount of money on the call side. So our trade price is 198. Now it's 14. This was 370, and now it's 1975. So we've lost somewhere in the neighborhood of $300 there. Made $100 there. So we can leave this put position alone. We've made most of the money we can there. We could always adjust that one too, but let's just look at one side at a time. So of course we're going to want to create a closing order here. We've got to get out of this this gigantic loss, and unfortunately we're going to have to bump it up a little bit. If this were a real market, we'd probably have to go somewhere around 503 to get it closed, and then we're going to go out to the next expiration and see if we can't open another call vertical, just to keep this iron condor alive. And so this was a dramatic move against us, so it's going to take some work to get this thing built back. And 39 days may not be enough, but for the sake of this video, let's go ahead and keep it there. Originally we had this open at 167.50, and so now we're going to go ahead and open the 195. So okay, I did something wrong. So we're buying back the 167.50. Buy back the 167, sell the 172. And then on the next one, we want to sell the 195 and buy the 200. I'm not sure. Oh, okay, there we go. So yeah, so it's still going to be a loss. We're still going to have to accept our loss here. But we are going to take another roughly $100 to open this position with, another 10 points for another 8 points higher. So, while Apple did move a lot today, I mean, that's a pretty dramatic move. So we've still got another 8 points. If we open this trade here, of course, it's going to cost us a little bit, and we probably have to move it over there to get it filled. And but what that does is it takes off our risk. Of course, we close our risk over on this side. This trade is virtually worthless. The odds of it coming back to here are slim to almost none. So what I would do is, if we could, is I would suggest we go ahead and buy this and sell that, and then we come to the current month and we just kind of narrow the playing field a little bit. So I would say we want to sell this vertical. So you don't want to, you've already made your money on the put side. You don't want to put yourself way up here close to at the money. You want to still give yourself a good probability of success. And you can see we'll take another $57 for our trouble. Let's call it 56. And we'll go ahead and open that position. Now we've got an iron condor where originally we had a 167, 160. We had a 7-point wide margin. Now we've got a 20-point wide margin on this iron condor. So yeah, we did take a loss. Of course, we were hedged here. The only way we're really losing money is if we have an extreme downward move. But I'll show you how we can build our way out of this iron condor mess. So we did take the loss here, and so we did lose 168. But now we've got what we started with was a 7-point wide iron condor, and now we've got a 20-point wide iron condor, and so it's a little less in premium than we originally had, but we've got a much better probability of success. So let's go ahead and skip ahead another week. And currently it's at 187. We need this to stay between 175 and 195. And let's see what happens over the course of the next week. All right, so it moved up just slightly, and you can see we made a little bit of money on our iron condor. So we're already fighting back from that $170 loss. Again, on our account, we didn't even show a loss. We're actually $116 up in just a few weeks. It's only been 3 weeks maybe since I opened this trade. I could actually look back and tell you exactly. Let's see, fills only. We bought Apple on 4/24, and it's been 3 weeks. We haven't even gotten, it hadn't even been 3 weeks yet. 2 weeks, 2.5 weeks, and we're already up by $114. So that's a pretty good 2 weeks for the amount of risk that we're taking, and we've got these iron condors here. So we're going to go ahead and skip ahead one more week, see what it looks like. We've got plenty of time to adjust our iron condor, and we're at 189 now. We would like to see a little bit of a downward move in the stock. I know that hurts our position here, but as far as our iron condor, we'd like to see a little bit of a downward move, or even a mild up move. But we did get a mild down move, and you can see we were rewarded nicely for that. We've already cut this. It was 170 something. Now we've already cut this down. We've got a $239 profit there and $145 in 3 weeks. So it's been a pretty good trade. You could make the argument that maybe it's time to close it. Maybe this thing's getting ready to go higher. What you could do is you could take a look here at the market that you're in. You could do that same math that we did to start with to try to understand what the market thinks. Nope, don't want that. Nope, don't want that. No, that's the one I want. So you can do the same thing we did when we started to kind of see what the market thinks is going to happen in the next 25 days. So we'll see it's at 187.83. Let's call it 187, and that's between these two strikes here. So we've got 365 plus 246, so 611 on the call side, and on the put side we've got 735. Okay, so I paused the video for a second because I couldn't figure out why this wasn't making sense to me. But what I did is I wrote the put down here instead of up here, and it got me kind of flipped around. Regardless, it's paying us less money to take a bearish position, which would be on the call side if we sold a call. It's paying us more money to take a bullish position, which means the market thinks this is going to move lower. And so we're just going to use that, whether it's right or wrong. We're going to use that information. You can see we have plenty of room to the downside. We could afford a 12-point loss here before it even gets to our short strike on the put side. If you were really concerned about it, you can see over here we only have, let's see, 195. We only have 8 points, so we've got a little bit more of a cushion on the downside, and the market's suggesting that this will move lower. Let's take a look and see what it does over the course of the next week. Let's go to the next week. Let's see if the market was correct. And the market wasn't incorrect, it just wasn't necessarily correct either. There was some bearish pressure there, maybe some people taking profits from this huge run up. Regardless, that move was beautiful for our iron condor, as you can see here. And it's at this point that I would say it's probably time to take it off. There's just not that much money left to be made. There's only $15 left to be made there, and so I just don't know if it would justify the risk for that small of a premium when you can open a new iron condor and take a larger chunk of the pie. So let's go ahead and create a closing order for that. I probably have to bump it up, and we're out of there. Let's working only. Kind of clean that up, and now we're basically going to do the same thing. So you can see over the course of, when did I make that first trade? I made that first trade on 4/24. So essentially 1 month later, we've made $167, $165, $66, and our stock price has done well. Of course, you could go back and you could take a look long term. Does it still look favorable to do that? And of course, make your decision as you see fit. But if this is me, I'm expecting a move higher. It's entered kind of this basing phase here. I'm expecting a little bit of a move higher. Let's go ahead and skip ahead a month and just see if it does move higher over the course of the next month. And I was both right and wrong. You know, looking at the full month, it moved lower. Short term, it moved from here to the 194 area. It didn't break out higher than that, but again, it's still kind of basing itself out there. I would make the argument that over the next few months, this will move higher, and of course, you can see it skyrocketed here. It had that little pullback, and then boom, took off to the upside from way down here at 194, 184, and finished here on this particular point at 228. So in any case, the video got a little longer than I wanted it to. If you have any questions, feel free to reach me at optionboxer.com. Thanks for watching.